Have you ever predicted the market so perfect, but then price just hits your stop loss and then it moves as expected? If so, you probably have experienced liquidity sweeps, right? So in this video, I'm gonna explain what liquidity sweeps are, why they happen, and how to spot them. So with that being said, let's head into the chart and I'll show you what are liquidity sweeps. Liquidity sweeps they're usually called fake outs. That's when the market makers hunt for stop losses, right? So that's what liquidity sweeps are. They lie above a high and below a low. So let me do some drawings and show you what I'm exactly talking about. So let's say we have an uptrend, right? We have a high, a higher low, a higher high, a higher low, right? So what lies above here? We have stop pending orders, right? What lies below here? We have pending orders. Pending orders, this below here, it can be sell stops, right? Up here, it can be, stop losses. And then up here, it can be take profits, right? And also it can be stop losses. So let's say it comes down here and then people, when the market comes up, they expect a break of structure up here, thinking that the market will continue pushing upwards, right? However, instead, what happens, price just comes here, fills those pending orders, and then it changes the direction, right? So what happened here, this is what we call a liquidity sweep, right? A point where there are potential for orders to get filled. A point where you would normally put your stop losses and price would come and hit your stop loss, then move into the opposite direction that you predicted initially, right? And then let's do the same example for when the market is moving downwards. So let's say we have a lower low, a lower high, a lower low, a lower high, right? So when price comes to this point, what do people usually expect? For the market to push below this low, and then they would call that a breakout, right? They expect the market to move this and create more lower lows and lower highs. However, instead, what happens? It comes here, fills orders, right? And then it pushes upwards. And again, the same, the opposite is true. So the market can fake you out here, right? Because people will be like, we're having a break of structure here. This will be a breakout, right? And then what does price do instead? It comes here, fills your stop losses or pending orders, and then it continues into the initial direction. So that's what a liquidity sweep is. Now, why they happen? I'm pretty sure I explained why they happen, so that let's say people who bought the symbol or the currency pair or the commodity at a discount price, right? They want to offload at a premium, right? They want to sell at a premium price. So that's what happens. So they know that people will be having pending orders at a premium price, meaning they want to be filled, they want to buy that symbol or stock or commodity at that price. And what happens when price reaches that point, the people who bought at a discount, they usually sell the symbol, right? So that's what liquidity sweeps are, and that's why they happen, right? Because people bought at a discount and they want to offload at a premium, right? Because it's normal for you to want to sell. If you bought something, you would want to sell it for a higher price so that you can gain profit, right? So that's what is happening here. So let me show you an example. Let's say, for example, you bought, this is Nasdaq. So let's say you bought Nasdaq down here, right? Where would you want to sell? You would want to sell here. You sell using your take profit, by the way, or when you close your order. So you would want to sell your Nasdaq up here, right, at a premium, meaning you would gain this profit, right? From this, if you look here, right, check the price. So you would have bought at $30,865, and then you would have sold at $30,946. So your profit in this case would have been 100 USD. So again, let's say you sold Nasdaq down here. where are you gonna look to buy on Nasdaq? Down here, right? Same goes. So now we're gonna go into the chart and I'm gonna show you some real life examples, right? So how to identify them? Yes, that's where we are going. We're gonna identify them in the graph. So this will be typical examples, and then I'm gonna show you major liquidity sweeps, which we usually take note of and trade off of them, right? And then some you just ignore because there's liquidity sweeps everywhere. They happen all the time, right? So there are those which are major, which we take them into account. The rest we just ignore. So for example, so let's say you predicted longs perfectly and then you placed your longs up there, right? Where would you put your stop loss? On this low, right? Because usually we know that once price comes and closes below this low, then that is a change of structure, right? And then what happened? Price came down, it stopped you out, and then what did it do? It continued in the direction that you initially predicted. So this down here is a liquidity sweep, right? So let me find a few more examples for you. Let's say you bought Nasdaq up here, right? Where would you normally put your stop loss? The current low, right? And then where would you put your take profit? You would target perhaps previous draws on liquidity, right? Now what did price do instead? It filled your order up here, right? And then it went straight down to your stop loss, which is below this low, right? And then price, after stopping you out, it went into the initial direction that you predicted. So some call it a fake out, meaning it fakes you out, thinking that we now have a breakout if you trade breakouts, right? However, for some it targets your stop losses, meaning it sweeps you out of the market. So that's what a liquidity sweep is. And now for the major liquidity sweeps that we take into consideration includes sessions highs and lows, hourly highs and lows, 4-hour time frame highs and lows, right? And previous days highs and lows. Those are the four major draws of liquidity that we take into consideration when trading, right? The rest we don't focus that much on them. So let me show you a few examples. So we had London's high up here, up there, right? Okay, this didn't. So that was London's high, right? It is a session high. So what did price do during market open? Market open is this candlestick here, 1530, right? This one. So I'm gonna go to M5 and show you what happened. So, there, see? So this is London's high. Price went straight up, right? Because we know there's liquidity here, there's pending orders, there are sell stops as well, right? For people who bought down here, I mean, who sold ES down here, they put their stop losses here, right? So price came up, it hit their stop losses, or it filled those pending orders, right? And then what did it do? It moved into the opposite direction. Isn't it beautiful? This is what liquidity sweeps are, and this is what happened today during market open. I hope you got the concept, and you're gonna have to practice it yourself so that you are able to understand it and get a grasp of it, right? So this is what liquidity sweeps are and why they happen and how to spot them on the chart. They are fake outs for retail traders who trade breakouts, right? And again, they are used to fill pending orders. And that's how you spot them on the chart. So I hope this video was very informational, and if you perhaps still don't understand it a bit, please watch it again and you will definitely get the concept. And then after watching it, apply the information. That's how you'll be able to see where liquidity sweeps are. And next time when you predict your trades, you will never get faked out, right? Your stop loss won't be hit unnecessarily so. So with that being said, thank you for watching the video. Consider liking and subscribing, and I'll see you on to the next one.